Hi, this is Smith on the line, and today I'm going to discuss how you trade on the forex market using the 4-hour chart and the 5 minutes chart. Now I have some specific indicators on this chart here. We're going to be looking at different strategies in trading. Now on the chart here I have the moving averages, which gives a distinction of the direction of the market. Now if we look at this, you find out the price actually broke above these moving averages, and as a result of that it kept moving higher and higher and higher until it got close to the Bollinger Band. This is on the 4-hour time frame. Now you can see what happens here. It breaks down. Now there is a custom indicator I use which rallies and gives me regions of support and resistance. At this point we have a resistance which would have triggered our short trade. At this point we have a resistance which would have triggered our long trade again. Now, but I just want you to notice the direction of how the swing occurs. Look at how the swing occurs. Now this gives us a trending market. Now let's see what happens at the top of the Bollinger here. Our expectation for this is that at this point the price is supposed to stall. It's supposed to turn back down. We have a bearish formation here already. Let's see what happened. Can you see? We had a little bit of stalling. Remember our indicator here signaled with the Bollinger. Now but this actually is supposed to go back and test it upwards again to give us a very solid evidence that the short is in place. Now we have, see at this point how the price was being curtailed by the moving average. This moving average is moving average 26. Now look at what happened. Can you see as it went back up to test the same point? Can you have the look? It came up, tested the same direction, but it couldn't break it, and what did you see next? It plunged down. Now there is something of note I also want to tell you right here now, and that is how we can use our moving averages as point of taking trades, either shorting the market again or using them as point of support or resistance. Now in this case we have a formation just at the top of the Bollinger, and you find out that anytime the price comes to any of the moving averages, it's a place where you short because it acts as a dynamic resistance. Can you see what happens? Look at another spot here. It came here, another point to short. Now this repeats itself until you find the price breaking through. We have our tacit formation here giving us a particular direction that market might be stalling, and that we should be looking to go long even if it's just a while. Look at what happened. Can you see that move? Then we have the tacit formation again, giving us a blink view of probably a short in place. Can you see how it happened? And you can see price kept hitting and dropping below. Price kept hitting and dropping below until another formation of tacit. Now if you look, we have the directions of the MACD because we have several time frames we are using. When we see a short, we know we use the MACD to confirm our shots, and then we use our moving averages, which act as a dynamic support or dynamic resistance based on the direction of the market. Can you see what happened? Dynamic resistance. So at each point in time when it comes to that place, use it to do what? To short the trade. You short the currency pair until we have a tacit formation that might give us an instance in which we need to be careful about what we're doing. You can see it still breaks down again. Now you can find out again that no matter how the price moved, it still fell below our Bollinger, our mid-band Bollinger, because the mid-band Bollinger has a way of acting as the fuel that gives us a rhythm and direction of our price actually. Another time frame, and look at what happened here. Can you see what happened? Actually acts as a level where we short the market. We keep taking it down, keep taking it down, keep taking it down, keep taking it down, keep taking it down. Now look at what happened at this point here. It came close to this, it didn't break, touched our tacit again. This time around it moved and broke above it. Now let's see, did it hold? It came again, touched the same point, moved again above it. Now look at this point here. Whenever it breaks through any of this and succeeds in breaking through this and holding above, then you know you have a long trade in play. But look at it, what happened? It didn't break above. Then what happened again? We see another shot. The market still stops. Now we have a little one in play here. It has broken above, but how strong is the break above this? It wasn't strong enough. We see another shot back down. Now I think, but for the fact that it has broken above and held above it a little bit, it gives us an indication that the market on the downside is being stalled and we might likely have an upward swing. The price should likely go back up. Now we have a tacit formation here. What happened? You can see it. It has broken above. This was from on the 10th of August. We had a long trade. We had a long trade in play. A long trade in play. Now, there's something I would like to show here now that will really act as fuel to know when the market is in a trending order. Now, like I said, we did break above this, held a little, came back, then we have a pull back up. Now, like I said, at the time where the market was dropping, we had this being used as our point of resistance. Now when we have a stalling of that price, you can find out that from this point here now, the market actually stalled very close to the Bollinger. Even Tacit confirmed it, and you can find out that it started picking back up started picking steam back up. Now at each point where it hits our moving averages, you find out that it acts as what? A dynamic support. Let's keep moving up. At each time when it hits, acts as a dynamic support. So this would have been a trade, this would have been another trade on the upside, this would have been another trade on the upside, this would have been another trade on the upside, this would have been another trade on the upside, this would have been another trade on the upside. Can you see how the market just kept pushing up? And we have another trade in play right here. So presently, if the price comes down to this point now and takes it, we should be looking at something in the region of let me insert the auto pivot points, the weekly pivots. This gives us a region where we should anticipate the price should get to. Oh, there was a little mistake. So our target should actually be around the weekly resistance to around 236.87. That should be our next target, going by the move of this now. So we just watch out when the price comes to this level. You can actually take the trade, and with that our target should be at that same place I just said now. So I hope you had a nice day. And that is the end of my lecture for today. I will likely give an example of how to trade the same market using the smaller time frame. Let's say when we have, say, a move like this, how do we use the smaller time frame to take our trades? So that is all for today, and thank you for watching. Goodbye.